I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a regular. He is a former floor trader at Bear Stearns. And back in April, I just wanted to show you this chart. He said that, May. He said the stock market looks like topped out, and he provided this chart. And I even took this to one of my neighbors, and of course they, hyperinflation, they'll inflate and they'll keep going up. It's going to go up forever, right? And yet, no. That's not what Mannarino said. Gregory Mannarino. I kind of tipped the hand here, but before I bring him on, and here was the chart he just sent me in the pre-interview where, this topping pattern, and blah, 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 blah. And he said that was the top. He said it was going to go up and down for a while, but, it's going to go down 900 point later, and some big plunge protection team action, last week 300 points down and 300 points up, and there you have it. Of course, I'm talking about Gregory Mannarino. Gregory Mannarino.com. Gregory Mannarino, TradersChoice.net. Hey, Greg, how you doing?
Great to be here. Thanks, Greg.
That was a big call. I mean, you called the market top even with all the plunge protection team and the manipulation and all that. I mean, they had some crazy manipulation last week. I mean, 300 points straight down, and it ended up zero. Ended up back to par. But anyway, what's going on in the stock markets with this big China series of devaluations in China and with the markets? And is this all just one-off things, or is it all interconnected?
Oh my God, Greg, there is so much going on and so much convoluting of every single thing. It's frightening. But with regard to that market top there, I think it was kind of an easy call in many ways, although I believe I was the only analyst on earth to make it. That's the truth. And it played out correctly because I follow something called Dow theory, which I happen to believe in. A lot of people don't, but I just tell people, go back on history, look at Dow theory, and point to a time where it really hasn't worked. And a lot of people come out and say, well, you know what, Greg, how can you say that is true when everything is manipulated? Everything is always manipulated. Just real quick before we move forward here, let's talk about manipulation because it kind of ties into everything. We all understand what these banks have been doing going back to LIBOR. Let's go back further than that. The mortgage-backed security nonsense that all these big banks did. And just last week, we found out that 5 of the world's biggest banks were involved in currency manipulation. HSBC, Barclays, Goldman Sachs, they all have to pay fines here. So everything is rigged. It's always been rigged, period. But that's besides the point. The free market always wins, and that's how you can make calls like that. But let's just move forward real quick. Absolutely. There is so much going on with regard to everything, currency manipulation with regard to China. But who's the biggest currency manipulator of them all? Well, I would have to say it's the Federal Reserve. And there's no doubt about it. And that, that'll play into that chart that you had just showed earlier. Let's talk about the dollar just real quick because I keep getting bombarded with questions myself. That spike that you showed in that chart. That was
let me show that chart here. Hold on a minute. Here's the chart you sent me in the pre-interview. That's what you're talking about.
Absolutely.
So here's where everybody's thinking. Yeah, everybody's thinking this is your chart you drew up. And so here's a dollar from 2007. Oh, and all of a sudden, the Fed started talking about rate hikes, and according to your research, it said this is what you're saying. It went up because everybody thought it was going to raise rates, and now. Here, let me get this thing close. Now we got this little downward move that everybody's calling BS on the BS. That they're not going to raise rates, it looks like.
Exactly. So we got that speculative bubble again. Look, there's been several on that chart that you're showing here on the U.S. dollar getting stronger on, again, speculation that the Fed was going to raise rates. Remember back in June, the whole market was getting ready for it. The Fed didn't do it. Look, this is the situation here that we are in. It's very interesting, and it's crazy in many, many ways. The Federal Reserve, and I've been talking about this forever, you've been talking about this forever, a lot of people are starting to understand this. The Federal Reserve has created unprecedented distortions in this market, every aspect. Nothing is real. Nothing is real. They've forced cash into certain assets and away from other things. And we're starting to see the ramifications of that. Let's talk about what's happening with crude oil lately. We're seeing this, well, more or less a deflationary spiral with regard to commodities. This is a self-feeding thing. Why is that occurring? Again, These are distortions that have been created by runaway central banks, none more so than the Federal Reserve, who is forcing a bubble in debt. It's the greatest threat to humankind, period, and because it's not just a financial problem, it's a resource issue, has hyperinflated the stock market again, and we're seeing what's going on with regard to commodities. This will reverse beyond any shadow of any doubt as the bond market decides fair market value for everything else. This is why the Federal Reserve and other central banks have decided to manipulate the debt market. It's the biggest of them all. We've spoken about this too. But again, there's so much going on here, Greg. It's unbelievable. And I believe at this particular time, we are teetering on that knife's edge.
Aren't they going to have a lot of bonds that can't be liquefied? I mean, aren't they going to have a lot of debt where they're just going to have to, if they do liquefy the hundreds of trillions of dollars in this debt, aren't they going to just completely destroy, vaporize every currency on the planet? I mean, they can't pay all this debt. These bonds are not good. Isn't that the end result? Because you've been saying for a long time, watch the bond market, watch the bond market. Isn't this debt going to not be paid back? Isn't it going to default ultimately?
Of course it is. Absolutely it is. And we're starting to see this, we sort of have with Greece, we have Puerto Rico here. It's everywhere. This is a global problem. It's going to engulf the world. It's going to swallow the earth, this debt problem that these institutions have done. They've done this on purpose, Greg. There's no doubt about it. They cannot be this stupid. They are setting up a situation, and I have no doubt about this. And this is why they continue to inflate the debt, which is inflating the stock market and creating all of these massive distortions in the market. This is being done on purpose at this particular time because they understand there's going to be no soft landing here out of it. Forget about a soft landing in China or whatever it might be. This is a global issue. This debt problem is going to implode.
Are they just doing it to buy time then? If they're doing it on purpose and they're not trying to fix it, and I've long said that, if they wanted to fix it in 2008, they'd have taken everybody to receivership, printed the money they needed to protect depositors, and maybe some bonds, but not many. And you would have fixed it. It would have been a painful. Lloyd Blankfein would be a greeter at Walmart, but we'd have fixed it, right?
Mm-hmm. Here's the issue. The issue is the mechanism of the money or how the cash works. It's a debt-based system, and we're at the end of it now. Period. This is why this is occurring at this particular time. Why we're seeing debt inflate. Why we're seeing equities inflate. Why we're seeing deflation or this deflationary spiral, which may get worse with regard to commodities. And people are going to start to realize that, again, the debt is no good. The cash is no good. So what are they going to do? They are going to flock to commodities at one particular time. I've been saying this since day one. People will at one point realize that commodities are real things. They're not floating around in like some fantasy land and that you want to believe that debt is a real asset. It's backed by nothing, by bankrupt governments as a matter of fact, so it's even worse than nothing. So all of this is going to reverse at one particular time. All this cash that's laying in these debt markets that's being hyperinflated by the world's central banks, the equity market as well, all this cash is simply going to move. It's going to all move at one particular time into commodities. I am certain of it. And that goes into the chart that you just showed us earlier with regard to the dollar, or that speculative bubble that we have seen exactly developed with the dollar with regard to whether the Federal Reserve was going to raise rates. You see that pullback over there? That's because the Fed didn't raise rates in June. And we could see this drop further if they don't. If the Fed does decide to nudge rates in September, Greg, it will only be so they can try to remain credible. But by doing that, they're going to make the deflationary spiral in that one aspect of the market much, much worse. And that is going to bleed off to everything else. Again, the situation is extremely dire. Think about it at this particular way. Look, I'm not an economist. I'm a trader. But anyone who has their eyes open can see how this works. You have, seriously, what I believe is a deflationary spiral with regard to crude oil and other aspects in the market, too. And that is going to force prices lower in that part. It's going to cut production. You're going to lose jobs. Businesses are going to go bankrupt. And it's going to bleed off to everything else.
So what are the money players doing now? Explain what they're doing. They must know this is happening. They didn't try to fix it. What's their game? What are they doing? Is this why all this big demand in gold and silver is the money players are ultimately front-running that trade?
Greg, it's insane, isn't it, what they are doing here, what these institutions that are rigging the market and continue to do so, going back to the mortgage-backed security scandal, the LIBOR thing. We just found out that the five biggest banks in the world, five of the biggest banks in the world just rigged the currency markets, HSBC, Goldman Sachs, Barclays, a couple of other ones. It missed all the mainstream media. You didn't even hear about it. But that did occur, and they're rigging the metals market, if that's what you're talking about right now, on purpose. Again, there's no...
And what's the reason on purpose? So they can buy it cheap?
Of course, absolutely. That's the only reason why the paper market exists, is to manipulate it lower. And it's a godsend to people who understand where this is going in the long run. Again, we are not acquiring these assets, gold and silver, as a trade. You want to trade these things? Go ahead. You're dealing with paper. But if you understand where this all has to go. It has to. All of these distortions that have been created by the world central banks, none more so than the Federal Reserve, have to balance out, Greg. It's mathematical certainty. So we're going to see that movement, again, of cash that I've been talking about, out of debt, out of equities, and into commodities.
Well, the dollar is a Federal Reserve note. It's a debt instrument. So let's just futurecast here. A lot of people have said they can't raise rates now. I mean, even you were thinking, well, they're going to raise rates until China devalued, and now we have a nuclear currency war going on. Unless they want to crash the market, they're not going to raise rates, and they may. I don't know. But let's say they don't. What do you suppose happens if the Fed comes out and goes, yeah, well, the economy's not very good. They won't say it quite that way, but they will. The economy's not as strong as we'd like it to be, and we're going to put off raising rate. What happens at that moment?
Well, we're going to see the debt hyperinflate further. We're going to see the U.S. equity market probably gain a little bit here, and we're going to see this deflationary spiral still play out with regard to commodities. But again,
does the dollar crash at that point? Does the dollar back way off?
I think the dollar is going to pull back beyond any shadow. Without, what is that going to do? It's going to push commodity prices higher, but they're going to find other ways, Greg, to manipulate everything and twist this until they can't. So all we need to know, as let's say people who want to take advantage of all this, is just look at the long run. Focus on this, because the now cannot be sustained. It's a bubble, Greg. And all I want people to understand is one thing. Every single bubble in history, economic and financial, they all burst without exception. My challenge to anyone out there who doesn't believe me is find me an exception to where a bubble hasn't burst. And they all burst for one reason, because they rise above a level that can be sustained by any means. Any. So all of these world central banks, whatever they do, will not work in the long run. So we need to understand what we need to be doing right now. And you can take advantage of this from many, many ways, many ways.
If they don't raise rates, are you going to call the top of the dollar right there, where they're just never going to raise rates? I mean, for a while you came out and said, they're going to have to raise rates to maintain their credibility, until China started, having a succession of devaluations of their yuan, which they sold treasuries to do. Is that a top for the dollar? Is that it? Is the dollar? Are you going to call that as a top if they don't raise rates?
If they don't raise rates, the dollar is going to pull back dramatically. In the short run here, on further speculation, again, in that chart, you saw the pullback in the dollar. The dollar may gain a little bit of strength in the short run here. If the Federal Reserve does not raise rates, that will pull back, and the pullback could be dramatic. It could be dramatic. So we'll have to see how that plays out as well. Again, I'm just kind of looking forward to, in a way, to see what their next move is going to be. Again, all they can do is prop this whole thing up, right? That's it.
What's that going to say to all the people who, I remember back at the first of the year, we're going to have a rate hike in June. Is it counting? We're going to have a rate hike in June. Going to have rate hike? Going to raise rates? Going to rate in June? June came, passed, not so much. And then, after in July, and we're going to have a rate hike in September. We're going to have early August, a rate hike in August, and all of a sudden, bam! China comes out, and that's the first devaluation was something that they hadn't done in 20 years, and then another one, and then another one. And so is there any way they can raise interest rates in September? And if they do, isn't that going to crash the markets?
I think the Federal Reserve is getting a little afraid of, I really do believe this, of the deflationary spiral that we've created in one aspect of the market and how they've hyperinflated another part of the market. They cannot be that stupid. They have to understand that this has to balance out, Greg. And they're trying, I think, again, if they decide to nudge rates in September, which I still think is a long shot, I would say 80% against at this particular time, it would only to try to remain credible. But they're going to exacerbate the problem with the deflationary spiral in certain aspects of this market. Again, everyone's talking about deflation, but we don't just have deflation. We have massive and hyperinflation in the debt market, massive and hyperinflation in the equity market. So the Fed, again, it's going back to what I said. They cannot be that stupid. They have to understand what they're doing. And the only thing I can come up with is they realize there's no way to fix it, so they might as well try to capitalize on it, and they might as well try to let their friends capitalize on it. That's what's being set up here, Greg. I've been saying for many years, we're going back to a two-tier society, and I believe you are. The middle class will not survive this. It will become systematically wiped out.
How are their friends capitalizing on this?
Very simply, they're getting into the markets. They're buying the dips. We see what's been happening lately. They're acquiring commodities. They're acquiring gold and silver in mass. These are facts. Despite what the paper market is trying to tell us, there's no price discovery mechanism in the paper market. It's not real. I want people to understand that it exists for one reason and one reason only, and I'll say it again, is just to manipulate the price of these metals here. And we, all of us, can take advantage of it by understanding that this debt bubble will burst. And we need to bet against it, and we do that by holding a hard asset, period.
You know, you're a trader, and you're a former Wall Street trader, and what does that tell you when the guys, at your level and higher, billionaires, who are saying, they know it's manipulated, and they know it's being, the Fed or whoever has a thumb on the scale, but they still want the metal delivered. What do you suppose is going through their mind?
Well, again, I would believe that what they are doing is taking advantage of the peg of the paper market into the physical market. Again, one has no bearing on the other than the suppressed prices are allowing those in the know to acquire these things at unbelievably suppressed prices. And how do we know they're suppressed? Just look at the debt. Look at where the debt is on a global scale. It's incredible. That's how we can put a perspective on this. And all of this, I can't stress this point enough. All of this has to balance out, and it will. It is a mathematical certainty.
You also have said that China is a big warning bell. You're in good company. David Stockman is out just late last week saying that China will implode. I mean, I think it's a desperation attempt. We talked about this on the phone, because we talk all the time. And I was like, I just think this is a desperate move. Well, you called me the other day. It was 3 times. It was a third move in a row. Yeah. Of course, what does the mainstream media say? Oh, it's no big deal. It's okay. It's not. I think it's a trend. David Stockman says that this thing's China has to crash, and it's going to be a crash in order of magnitude that the world has never seen. What do you say about that?
Well, Greg, I mean, there's no doubt about it. China's in big trouble, and they're broadcasting to the world that they are in big trouble. They've taken over their stock market. They're not allowing certain trades to take place. They're not allowing shareholders who have a larger than 5% stake in a company to sell it. And they're forcing brokerages to buy stock. Number one, I mean, that's incredible. Right now, they have 3 currency devaluations in the past week. So they're broadcasting to the world that they're in a lot of trouble here. So that's a big deal. Obviously, they're the world's second largest economy. Greg, look. This is stuff you and I have been talking about forever. This is a global problem. This is not just limited to Greece. It's not just limited to Puerto Rico. These little small provinces and small countries. This is a global problem, and it's going to be a global meltdown, the likes of which people really can't even fathom at this particular time.
Gregory Mannarino, TradersChoice.net. Gregory Mannarino, thank you for joining us today on USAWatchdog.com.
Great to be here, Greg. Thank you.